Absa Bank Kenya has posted a 9% growth in its net earnings to stand at 11.7 billion shillings for the half-year ending June 30, 2025. The earnings were supported by increased customer deposits as well as a recovery in the construction, telecommunications and services sectors. The bank, however, recorded a decline in customer assets, signalling the prevailing macroeconomic headwinds. Jimmy Mbogo now takes a detailed look at the bank's performance for the first half of 2025.
In the half-year running between January 1st and June 30th, Absa Bank saw its net profit increase by 9%, rising from 10.7 billion shillings to 11.7 billion shillings. The bank also saw its non-funded income surge by 3% from 8.8 billion shillings to 9.1 billion shillings, while its core capital strengthened from 14.8% to 17.6%. Despite the central bank's rate cuts, customer loans fell by 4% year-on-year to stand at 305 billion shillings as businesses and individuals leaned towards short-term facilities. The bank's revenue also dipped marginally to 1%.
It doesn't mean that when rates just come down within a very short time that it spurs credit demand, because we've been lending to these customers. But then over the period they start repaying, they repay faster. Their capacity now to borrow then will pick up. And that's what we are looking at. It could be 6 months, it could be slightly longer, but we should be able to see this picking up and you can already see those demands.
If you look at the main number for credit sector growth, it's a single digit, but it's a turnaround from where we were in the last April, March, January, February numbers. And so that pickup we expect is the start of the growth in the private sector credit in the economy.
In the period under review, the bank saw its gross non-performing loans surge to 13%, but remaining below the industry average of 17.6%, an issue that the bank says has been occasioned by disposable income pressure, which continued to weigh on households.
When you look at our absolute NPL numbers, they're generally flat, but I think the fact that the asset book itself is down by a small number has affected that. But as you see, it still remains significantly below the industry average, and we expect the direction of travel to be more positive as we go forward.
Shareholders will receive 0.20 shillings per ordinary share as the bank balances between investment and return on equity. Jimmy Mbogo, Citizen TV, Nairobi.